Okay, good evening, everybody. This video clip is intended for all the folk that attended the Saturday, 3rd of September 2022 Pearls of Wisdom seminar. So what we've decided to do started with Michael from Zfin, and it's following, I'm following suit, and so is BCM Track, and Waterlight and Zentech will probably do the same. So what we've decided to do, you'll notice that the media, in other words, the slides were not that perfect on Saturday. So what we've decided to do is to rerun our little talks and record them for ease of reference so that you can go back and run through them if you really feel like it. Okay, so firstly, thank you so much for attending on Saturday. I thought it was tremendous turnout. I mean, we had exactly 90 attendees by count of the name tags. And yes, enjoyed by all. I've had tremendous feedback. Nobody's told me that it was horrible. Hope the sandwiches were okay. I didn't get to have one. Okay, so here we go. Okay, so this is my effort. The others are doing same, and I know that Zfin's presentation is already available on the Zfin website. Okay, the links will be sent out this week. Okay, so sectional title insurance pointers. So all I'm doing, or did on Saturday, was to give you a few pearls of from the insurance. Obviously, I've got so much to say usually about insurance, hours and hours. I could go on with interesting stuff, examples and so on. But all I'm doing is I just within the 15-20 minutes that was allocated to each speaker, I'm just going to give you just a few pointers. Okay, so the first thing I did, this is the only slide that I've just quickly slotted in just so that it makes sense because we're not in front of you physically. I'd handed each of you one of these booklets, as you've well aware, and you know, you will have those in front of you. So if you want to make reference while I'm speaking, you know, have the booklet handy. It's because it's going to make more sense. I haven't actually made slides of the pages. Right, so the pearl number one, the first thing I always say, and I had the some of my colleague brokers attending as well, so you will be reading this as well. And nobody shook their head in disagreement with me. So I always say that you should work with a broker that understands sectional title. I think that this is pretty important, given the environment and the nature of the risks, that a broker needs to actually understand. A broker needs to understand what a section is. A broker needs to understand what an exclusive use area is, the difference between a unit and a section. You know, the fact that you know, for example, the body corporate doesn't own a building, believe it or not. A lot of brokers don't actually even understand that concept. How can the body corporate be responsible for the common property when they don't actually own it? The owners own the common property collectively. It doesn't sit on the balance sheet of the body corporate. You know, all of these sort of concepts, a broker who understands sectional title will understand. Okay, so my second pearl of wisdom from an insurance point of view is that you should make sure that you receive your written advice annually. Now, I can't emphasize that enough. If you go to page 12 and 13 in the booklet, as I alluded to on Saturday, quite a boring looking page, but it's all there, you know, why you should actually receive written advice, the importance of it. It's critically important. And the Phase Act Code of Conduct, I see that as kind of like the regulations and the rules in terms of the Phase Act, Financial Advisory and Intermediary Services Act. You know, this was published in 8th of August 2003, gazetted in fact, and it's pretty important. I believe that the trustees should make sure that in fact you are receiving the written advice to the standard that is set out On Saturday, I did allude to the fact that you could actually find more on the Addsure YouTube channels. And I repeat that. If you go to Google, go Addsure YouTube channel, and you'll find a couple of video clips there. And I've got one on the renewal process, which we follow. So any broker can go there and have a look, or any trustee can go and have a look and see how Addsure does it. Okay. The next pearl of wisdom, we call it, is, do your schedules of replacement values properly. Now, if you go to page 36 in the booklet, I've got an example. I'll show you another one, but page 36 and thereabouts in the booklet sets out the process the way we think it should be done properly. It's pretty important, and yeah, I'll give you a quick little example. And this is one of the reasons I'm doing it here for you, is because it wasn't also so very clear on the screen on Saturday. So if you look at just this up, this is just a little cut and paste from a actual valuation, and it just gives you a good indication. In fact, if any of you watch the EUA series, you might see this, find this a little bit more familiar. So if you looked in this example, the flats, the actual apartments, are insured for 15,000 Rand a square meter, and the garages only 4,000 Rand a square meter. The total sum insured is actually not 13.6 because there are other bits and pieces under this, and I just kept this big for you so that you could see it on the slide at the event, because as we all know, it's quite a big venue, and the projection wasn't expected to be great anyway, but it's actually 22 million Rand odd, the total sum, if you add all the other bits and bobs. But I just wanted you to basically see the garage and the apartment difference. Now, this is a typical, and I have made this up, so this is not a copy from somebody's policy, so don't worry. I've made it up, but I've made it up pretty much so it's imaginary, and I've used some funny names on the side just to give you an idea. So there's actually a rule. One of the rules actually says, well, two rules really, one flows into the other. Rule 23.3 actually says, and I could bore you by putting up all the rules, but I'm not doing that. A body corporate must obtain a replacement valuation of all buildings and improvements that it must insure at least every 3 years and present such replacement valuation to the annual general meeting. So you have a valuation done every 3 years. And I always suggest that at the annual general meeting, you have at least one copy available, even for the 2 years that you're not having a valuation done. Have last year's valuation there. Okay, just so that you can reference it in need be. It says so. I don't think it's necessary to put it in the AGM pack. Just have at least a copy there so that if anybody wants to come and have a look at it, they can reference it. And you can actually say that you can send them a copy at a later stage, because you're not going to approve it or necessary. It's not on the actual agenda itself. But then 23.4 actually goes further. It says a body corporate must prepare for each, but this is on page 10 of the booklet, by the way. A body corporate must prepare for each annual general meeting schedules showing the estimates of the replacement value of the buildings, etc. Okay, a body corporate, I repeat, a body corporate must prepare for each annual general meeting schedules showing estimates of blah, blah, blah. It does not say, go to your policy, that most recent policy document, fish out the page that shows this schedule on it, photocopy it or scan it, and include it in the pack. No, it doesn't say that. It says that you must prepare something. And that's my point. So here's an example of what would happen if you just took a photocopy of what's in the policy. What you would actually see is names sometimes, which we don't want to see. We don't want to know any famous people that might be owners, or some you want to even know the name of the rich family trust. We don't want to know about them. We're not interested in who owns it. Okay, what we're interested in is actually the total unit sum insured of a particular section. Okay, we don't even want to know what banks their bonds are with. Okay, so that mustn't show. Okay, now the point I was showing you in the previous slide as well was the garages here. You've just taken the 22 million and you've divided it by the PQ. So your garage 7 is just been divided out with all the sections, and so you've got a straightforward sum insured divided by the PQ. Now the insurance company will by default structure it that way if you haven't just done it a little bit more carefully. Okay, so that's point 1. And then point 2, just have a look here. There's 150,000 Rand has been added here, okay, which is actually an EUA improvement. Okay, I'm going to come to that now. Okay, an EUA improvement has just been added in the additional sum. So what we're saying is the correct way to set this out is to, we summarize the valuation at the top of the schedule for a reason, because this year the valuation might have been done last year, and this year you've just escalated the figures so people can get an idea. Your 15,000 Rand I showed you last year is now 16,500, and your 4,000 Rand per square meter for garage is now 4,400. And you can see we set those out in the different columns so that we can extrapolate the figures more correctly. Okay, so you don't have to just simply divide the schedule by the PQ. It doesn't say so in Rule 23.4. It actually says that you must set out, prepare a schedule showing the estimates of the replacement value of each unit. Now, the replacement value of those garages are not just a divided figure by the PQ. Okay, you can see here what we've done is we've actually used the 4,400 a square meter, the 202,000 we've divided out more fairly. Okay, so can you see that? Okay, 202. Okay. All right. It comes down to 240 with everything, 240 down here. Okay, then it's 19 million odd something here, which is your residentials. Okay, your common property item we've separated. The common property items we divide by PQ. Okay, I don't think I went into this amount of detail even on Saturday, but I'm just giving you a little bit more, seeing we've got a little no time restraints here on the actual video version. Okay, so what I did show you was just a quick glance at the difference. Can you see by doing it wrong, in other words, just doing a slap-on photocopy from the policy document and never ever actually going the whole hog and doing what the rule says in preparing. The top one is your old wrong one that I showed you, and the bottom one is the correct one, in my opinion, my humble opinion. Okay, and we've been doing it this way for pretty much well before the paddocks courses even came about. And it's pretty much become the industry standard on how to set it out. So I think, just for example, also take note, I forgot to tell you that. You see that 150,000 Rand that I mentioned was an EUA piece there? Well, we actually put that 150,000 EUA wooden deck, 150,000. An EUA is common property, so you most certainly cannot add it to an improvement. You actually need to 100% show that as a separate item. Doesn't get lost, it's still there, but you need to have it there so that you can bring it into the common property totals. Okay, your 2.6. Actually, all the owners own a piece of that exclusive use area. The recovery for the premium is made through the EUA contribution. Otherwise, you're doing it twice. Okay, I mentioned that in the EUA webinar we held recently. Okay, so back to this. So you can see now, by doing it correctly, you have different figures. Okay, so 1.6 million versus 1.7 million. That's just section 1. And this is a small body corporate. Can you imagine how big it, or how far it can go wrong on more exaggerated figures? Okay, so do it correctly, lay it out correctly, spend extra time on it. We believe that the rule is very clear that the body corporate must prepare. So then who must do it? Well, ultimately the trustees must. In fact, the old rule before 2016 used to say the trustees shall prepare. It didn't say the body corporate, it said the trustees shall. Therefore, I would assume that you your contract with your managing agent would imply that the managing agent should probably do it, if that's what it refers to. If the managing agent is undertaking to sort out all the insurance stuff for you. And then also, certainly, as I've been correctly advised by many managing agents, there's an expectation that the broker should help you set this out. After all, the broker's experienced in dealing with these valuations, dealing with these risks, and dealing with these assets. And hence, I come back to the experienced sectional title broker should be able to help you set this out. And remember, your absolute layout is almost like a template that you can use next year and a year afterwards again. But just get it right and then review it every 3 years properly. Okay, so pill number 4 is mitigate. Okay, and as I said on Saturday, I like the M3 approach that one of the insurers use. It's Camargo. Always talk about the M3 approach. I like that analogy. So they speak about manage, mitigate, and something else. Manage, mitigate. Can't remember the other M, but I like to say mitigate, mitigate, mitigate in sectional title. And what do we mean by that? Okay, we mean by actually, stopping the problem, stopping something that's going wrong so that everything doesn't fall down. Okay, so just some examples of what I'm getting at. Do an annual roof checkup. There are roofing companies that are prepared to, for a very small cost, in some cases, if they're your contracted person, they might even do it for almost nothing. Some companies are happy to send us a drone over the roof. They can take high-res photographs. They don't even have to climb on the roof. Okay, have it done, especially those those heated on type of flat roof and all of those waterproofings that crack this time of the year. In Johannesburg especially, because obviously this is aimed at the Johannesburg chaps. Now's the time, August, September, October, if you're lucky, but get those roofs checked before the storms come. Remember, when the roof leaks and it messes up somebody's ceiling, was it the storm that caused it, or was it the worn and torn and neglected roof that caused it? That's always the bun fight. Okay, no bun fight with the insurance company. If you had a drone go over it, take some photos, or somebody got up there, took photos, and they gave you a nice email to say, we inspected the roof, it was all in good order, here's a couple of photos. Insurance company are going to battle to reject that claim if you've got that on file. Okay, I think once a year is a good time on average. I saw an Australian website, as I mentioned. You can go and Google it and look for how often should you check a roof. Some of them say 3 years for this and 1 year for that. Depends on whether it's tiles or slate. But I wouldn't go that far. I think here in Johannesburg with our storms, once a year, look on a tiled roof, go and look for cracked tiles that might have got damaged in the last year's hailstorm. Okay, loose paving and bricks. I've got some photographs of that. We discussed that this morning, actually, funnily enough, in training with some of my staff. Yes, my staff also go through rigorous training. So some of the guys are being trained every week. We actually went through some pictures of loose paving. We've actually, just because a brick was loose, we've seen a 2.5 million rand liability claim against the body corporate because of a loose brick claim. Somebody slipped and fell. It went further. The person was diabetic, and they actually lost their leg through an amputation as a consequence of the injury. So it got ugly. I don't know where it went eventually, but I do remember that claim. Okay, swimming pool gates. This is one of my areas, as I mentioned on Saturday. Anybody who's got a swimming pool gate, whether it's on an exclusive use area or whether it's the public's or common properties swimming pool, check those gates, even the exclusive use area gates. The safety and repair and maintenance is still a trustee's responsibility, even though you think it's the owner's or the enjoyer's responsibility. No, safety is all common property, all belongs to the trustees. Just bear that in mind. Go and check that those gates automatically, those springs shut. You pull back the gate, let it shut. Make sure that that is all in order. Swimming stairs and handrails, make sure that they are compliant and in order, and you've got enough handrail per riser, etc. Any leaning walls, We've seen an ugly one this week, actually, last week. Wall fell down on a car, and believe it or not, the insurers are rejecting that based on negligence. Okay, so it's a liability claim, and the insurance company is not actually happy to entertain, because they felt that the trustees should have at least, couldn't have missed that. A tree was pushing this wall over. What were the trustees waiting for? For the wall to fall over so then they could claim? Okay, so I'm not saying that's the case. I'm not saying that at all. But attention to leaning walls, roots pushing the wall over. Have them attended to. Otherwise, it's going to get ugly. Okay, tree roots and branches trimmed. I can show you lots of photos there with the roof, the trees coming and touching the roof almost. The next storm comes along, I think this whole branch will probably take tiles out. Okay, trees grow during seasons. By the time when the wind comes in Cape Town especially, but we're talking Joburg here, when the storm comes, especially the acacia trees, if you've got an acacia tree around, they get uprooted quite easily. Okay, burst pipes versus leaking pipes. I remember on Saturday, I had 10 minutes left, and then I started discussing this, and then next thing I was a little bit over time. So I'm going to do this briefly. Okay, I could have actually shown you the booklet, but if you go to page 55, page 51, I've got this page which has been specifically designed, as I showed you on Saturday. It's all squashed onto one page because a lot of people use this page. They scan it. I think just this last week, Clive, you're in the audience there. I gave you a nice copy of the page so that you could send it out. We use this page in conjunction with a nice blog article we've got. If you go Addsure blog, water damage claims, or all about water damages, you will find a nice article which goes a little bit more than this page. And I usually refer to this page and that blog article when I'm explaining the difference to a client. Okay, so burst pipe versus leaking pipes. Okay, so the bottom line is there's three, I put it into three boxes. So we first deal with a burst pipe with resulting damage. Okay, burst pipe is a picture like you can see in the booklet. Now, obviously, it's a real burst pipe. Okay, it's bottom line. It's a nice burst pipe picture. The pipe is burst. Okay, it was a perfectly good pipe. In came a huge surge of water or high amount of pressure, and the pipe burst. Okay, for whatever reason. Okay, this afternoon, Jim and I were discussing it, some of the pipes and what goes on. Jim, nice seeing you this afternoon after Saturday seminar. But really, a burst pipe is something that happens periodically, and when the pipe actually bursts, it's a full-blown insurance claim. So you can claim for the burst pipe, the repair of the burst pipe, the damages that result. The water runs downstairs, and it damages the ceilings below, even the walls below, or the flooring below as well, and it damages stuff upstairs as well. So that's all included in the claim, provided the pipe burst. Okay, then your second scenario is your deteriorated pipe. Okay, so again, if you go to the booklet, you can see the black picture there. It's a pipe that's got pinholes in it. It's an old fruit pipe, so it could be a copper pipe with pinholes, or it could be a galvanized old rusty pipe. And yes, it can be embedded in the wall. No, you're not expected to maintain it, as somebody alluded to on Saturday. We're not talking about maintenance. We're talking about a pipe that's deteriorated over time. Okay, it's gone fruit. It's old. It's starting to seep water through the pinholes. It's spraying a fine spray. Well, how do you know? You've got damp on your wall and mushrooms growing out of the wall. You don't know, where the smell is coming from. Bubbles, paint. I can show you lots of paint bubbling on the wall. Mushrooms, green, black mold. Okay, the plumber comes, chops it open, finds the old fruit pipe there. It's simply not a claim. Okay, It's a wear and tear. The damage has been called over an extended period of time. Okay, not a claim. Okay. Just by the way, I want to reiterate that what I'm saying here is typical of policy. So remember, you've got an insurance contract. So these are typical of the sectional title policies. Okay, I mean, I'm not showing you a policy. I'm just showing you the typical scenarios. And it's a good standard, or could say benchmark way approach of looking at it. The CIA policy, the CIB policy, the Santam policy, etc. Okay, sometimes some of them come along and offer you a little bit of help here and there extra, but this is the benchmark. Okay, so you've got scenario 1, burst pipe, all claimed. Deteriorated pipe, fraught pipe, pinholes, something wrong, damage over time, no claim. It's a wear and tear issue, not a maintenance issue, wear and tear issue. Okay, the insurer does not want to rebuild your building when it's old and fraught. Okay, it's simple as that. It's like a rusty car. Okay, I know somebody did argue that with me. I didn't want to go into the full debate. I'm not going to go here either. I will do a further discussion on it in more detail, just on this point at some stage. But I think for the moment, understand that it's a contract, and your insurance contract sets out what they will and they won't cover. That's a contract. And it's the same as a managing agent contract when you think about it. If your managing agent contract says specifically that they're not going to come and wash your car because you're an owner in a scheme they manage, it means they're not going to come and wash your car in a scheme that they manage. You might want them to, but if the contract doesn't say so, you can't expect them to. Okay, it's contractual. And then the third scenario, the third box, is your deteriorated pipe, old fraught pipe, rusty, same as scenario 2. The exception is that it suddenly gives way. Okay, so all of a sudden you go to bed one night, you wake up in the morning and there's a pool of water coming from your bathroom. Your old fraught pipe just eventually gave in, or the pressure was just too much for this soft, rusty pipe, and the water just came. Okay, now what do? Plumber comes, he opens it up, he repairs it. Okay, so because it's wear and tear and an old fraught pipe, no claim for that part of it. Fixing the pipe, putting the wall back, even putting the tiles back, no claim for that part. That's the repair. However, because the resulting flow of water caused damage, now you can actually usually claim for sudden water damage. Not all insurers, but certainly the CIAs, CIBs, and sometimes are more generous on these points, and you can actually get sudden resultant damages. Okay, I said not all policies will be generous there. Okay, there are one or two policies a little bit more generous in finding the problem, but I'm not even going to bring that into the equation because I consider that as a bell and whistle extension. Okay. All right, so there we go. So that's that pill. Then claims ratio, I do believe you should try and understand it. I could spend another 20 minutes explaining claims ratio. In a nutshell, claims ratio means 100 Rand premium comes in for the year, 50 Rand premium goes out in claims. You have a 50% claims ratio. 100 Rand comes in premiums to the insurance company, 100 Rand gets paid out in claims, you have a 100% claims ratio. Okay, so it's good for the trustees to understand about claims ratio. All I'm going to say today is that your ratio of claims to your actual premiums is pretty important on an ongoing basis, especially if you're a larger scheme. And I'm not talking about the once-off fires and that sort of thing. I'm talking about, on average, your bursty pipes and your geyser replacements and all the things that are sort of happening, the cars bumping the gate 3 times a year in the larger schemes, or a burst pipe here and a burst pipe there. If storm damage comes along and causes some damage around, on average. So over a 3-year rolling period, I like to look at those figures. Some insurance companies give you 3 sets of figures. It's not always the rolling 3 years. Some of them give since the policy incepted. Another one gives also the 12 months, and then what this year has been like. So you can get a trend, but by and large, your claims ratio should not exceed 60%. 60% is the insurance company's break-even point. If your premium is running on a claims ratio of about between 35 and 55%, you're running pretty well. In other words, I say that that's a sustainable and the correct premium. If you're running at a consistently 20% claims ratio, the insurance company are enjoying a little bit of fat. In other words, they're making money off you. Okay, and they're spending it on other bodies corporate. And there is space for you to negotiate a better premium. If you're running on 55% claims ratio, you're getting a bargain because the insurance company is actually just about not even paying their bills. Okay, so try and understand that. If your claims ratio is running at 100%, the insurance company might need to double your premium to get it back to 50%. Just understand that concept. It's a hard pill to swallow, but if I went into more detail, you would understand. We'll do a YouTube on that one of these days. Okay. And then lastly, the pill number 7 is just geyser mitigation. I'm not going to actually go into this much because it's going to be over to Glenn to speak to you more about geysers and mitigation. I'm sort of, Glenn is speaking after me in the real thing on Saturday. And I'm actually going to say the same thing because I know Glenn's going to do a video clip for you as well. So yeah, so I'm more interested in geysers account for 60% of claims in some instances. If the geysers are causing resultant damage, in other words, if the geysers in your ceilings most of the time, a lot of them are outside, and then that's not so bad. But when geysers are in ceilings, it's high claims ratios. Just the geysers can push you over and push your premium up. And I think that if you can take control of your geysers, you can actually do much better. There's that little anode that should be changed. Nobody does. There's your PRV, etc. A lot of stuff can happen with geysers. And, at this point, I'm going to finish off. But what I am going to say is that an owner, being terms of Rule 31 on page 44, go to page 44 and read a little bit more about it. It tells you who's responsible for what. It says that the owner is responsible for the whole geyser, okay, and shouldn't actually be insured, believe it or not, because it should be insured against storm and fire and things. But when it comes to maintaining this guy, why should the insurance company be doing it? But contractually, they're actually putting in a maintenance section because they want to help you mitigate. The insurance company don't want to replace geysers for nothing. They would want to help you maintain it as well. Okay, so just understand this diagram also just shows you wouldn't have been able to see it on Saturday, so I didn't bother to show you, but it just shows you the red part is what interpretation that I've been working with some of the leading attorneys, which says the owner's responsibility and the body corporate's responsibility, common property on the blue lines. Okay, so that's it from me. I'm again, thank you for attending. It was great to see 90 people. Some of my old friends were there. That was great to see. I expected mainly trustees, and it was really great to see so many managing agents and new faces. Unfortunately, we didn't have time to mingle enough, and I would love to have met some of you. So please, particularly the managing agents, my approach, as most of you know, is I actually like to work with bodies corporate whose managing agents are comfortable to work with us. They might have their own brokers. That's why I invited other brokers along on Saturday. Each broker and managing agent have their own systems. We've got our systems that we like to share with the managing agents. But please, new managing agents that were there who haven't met us before, come talk to me. I'd look forward to speaking to you. All right, it was great to have an unexpected high number of managing agents there on Saturday. All right, so that's it. It's a wrap. Glenn, over to you.